Bismillahirrahmanirrahim. Subject is Principle of Auditing. This is second lecture on Introduction to Audit. I'm Majidullah Khan, Assistant Professor, Institute of Business Study, Guwahati University of Science and Technology, Guwahati. Teaching agenda for today lecture is difference between auditing and accounting, who can be an auditor, what is an audit report. Standard format of auditor's report, expression of auditor's opinion. Moving further, distinction between auditing and accounting. Auditing and accounting are very closely connected, but both are separate activities. In accounting, the director of the company are responsible for establishing book of account or for keeping books of accounts. So these books of account provide basis to record financial information, and these recording of financial information are then used in preparing annual financial statement. These statements are used by shareholder. So these shareholders in annual general meeting appoint an auditors. Why? Because in order to increase their reliability on financial statement. So the auditor is appointed to ensure that adopted consistent and appropriate accounting policy in order to prepare and present financial statement according to the relevant law and financial reporting framework. Moving further, so financial statement, these are three financial statements. First is balance sheet, income statement, and cash flow statement. All should be in accordance with local laws and international financial reporting standard issued by IF, International Financial Accounting Board, IFAC. Accounting. So what is accounting? Accounting is basically a process of recording. For example, if any economic activities occurred in an organization, it is first recorded. And then we will classify this economic activities. What is classification? Classification is about either it is assets, or it is liability, or it is income, or it is expenses. So we will classify this transaction as a second activity. Then we will summarize this. For example, if it is an asset, we will record in asset account. Asset are further classified as well. Then we will third is summarization. Summarization means putting all similar transaction. For example, if the transaction is regarding cash, it should be recorded in a cash account. If it is regarding account receivable, it should be recorded as an account receivable account. Then the final figure is summarizes. This summarize figure and then report, that is fourth activity which is be done, report. So account receivable are always report in balance sheet. So reporting financial statement is the fourth activity. It should be in a systematic manner, not in random manner, for the purpose of decision making. So the final thing is the whole accounting process is a system uh, which record, classify, summarize, and report financial information to the manager, to employees, to shareholders, and any other user of the financial statement in order to make decisions. So, accountant, in order to achieve this systematic process, it is necessary that accountant must have an understanding of the principles. Principle means what can be debited, what can be credited, and the rules means that are prevailing in the country, like in Pakistan, IFRS and Company Ordinance 1984 that provide basis for preparing financial statement of a listed company. Be remember that Company Ordinance 1984 is not applicable to sole proprietorship and partnership. So when we are talking about the audit of listed company or public limited company. So what is audit? Audit is basically is all about examination of these financial statement that it is presented in a way that properly reflect the financial information that occur during the accounting periods. For example, if an auditor is going to audit the financial statement of the company during 2019 and 2020, so he should make it sure that the financial statement reflecting the true activities of regarding the economic activities, true economic activities of the firms that occur during that specific accounting period. So auditing is for or usually for 1 year periods. To carry out the above function, examining a financial statement, the auditor must have a deep knowledge in understanding of accounting, including accounting standard, that is IFRS, and what are the and prevailing practices in the financial reporting. So the directors, those who charge with the responsibility to prepare a financial reporting, will consult with the auditors about what appropriate accounting policies to be follows. So the auditors should have a meeting, should consult the director that appropriate accounting policies should be followed. Who can be an auditor? To work as auditor of a public limited company, or to be work as an auditor of public limited company or private company which is subsidiary of public limited company. The third condition is private company having capital that is equal to 3 million or more. The requirement is the person who will work or who will be appointed as an auditor of these three type of company that are mentioned above should be chartered accountant within the meaning of Chartered Accounting Ordinance 1961. In Chartered Accountant Ordinance 1961, Chartered Accountant means who qualified all the exam of Institute of Chartered Accountant of Pakistan and completed 36 years of articleship with the Chartered Accountant firm. So for a listed company, auditor must have satisfactory quality control review. These are quantity control review are for the audit firm, not for a single chartered accountant or for a person. If anybody who is working as a consultant, is an auditor in Pakistan, should comply with QCR, quality control rating issued by ICAP, Institute of Chartered Accountant of Pakistan. So for partnership, for the company below having capital below 3 million, sole proprietorship, these requirements are not mandatory. So these are mandatory only for these three scenarios. What is an audit report? Audit report is basically the purpose of the audit is to enable the auditor to say that the accounting showed true and fair view. Of course, they do not show. Of course, to say that they do not show a true and fair view. So the final aim of the audit is that the auditor is able to present his view on the financial statement. Auditor is going to examine all the record of the company, that is regarding to its financial statement, from single entry to the trial balance, vouchers, receipts, invoices are checked. So by entity we will means the three scenario or the three type of organization which we mentioned earlier in the slides, means public limited company, private company is a subsidiary of public limited company, and a company having capital of 3 million or more. After examining these financial statements, the auditor produces a report that addresses to the owner or the stakeholders. Stakeholders may be debtors, may be any other person who have a stake, the government, the stock exchange, Security and Exchange Commission of Pakistan, implies any other person who have a stake in the company. In this report, the auditor express the report is addressed to these people, to the shareholders. In this audit report, auditor express opinion about what about the truth and fairness of the financial statement, and sometime other aspect of the financial statement are also mentioned. Standard format of the audit report. This is the audit report according to international standards on auditing. We have audited the accompanying financial statement of a company ABC Limited, which comprises of balance sheet. Balance sheet means at a specific date, that is specific date. Income statement, and statement of changes in equity and cash flow for the year then ended. These three statements are for the whole year, while balance sheet is on specific position, and some summary of significant accounting policies and explanatory note. If you have, this is the first paragraph, and every report is writing in this specific pattern that we have audited the accompanying financial statement of ABC Company Limited, which comprises the balance sheet is at 31st December 2021, and the income statement of changes in equity and cash flow statement for the year then ended, and the summary of significant accounting policies and explanatory note. If you ever go through the annual report of the company, and you see that there are explanatory note to the balance sheet and to the income statement. The second portion of this is first portion, this is second portion of the audit report. It expresses that who is responsible for the preparation of the financial statement. Management is responsible for the preparation and fair presentation of these financial statements in accordance with the International Financial Reporting Standard. Since this is the report according to International Standard Auditing, if it was according to Form 35A of the Company Ordinance 1984, then we will extend here and Company Ordinance 1984. So what are the responsibility of the management? Designing, implementing and maintaining internal controls relevant to the preparation and fair presentation of financial statement. First responsibility, free from material misstatement, not a minor material misstatement, whether due to fraud or error. Selecting and applying appropriate accounting policies, that is also the responsibility of the management. Making accounting estimates like depreciation, like any other estimate, and that are reasonable in the circumstances. So accounting estimates is basically how much depreciation should be charged in the first year, how much should be charged in the second year. These are the responsibility of the management. This is second part. This is third part, which is about providing a base for the opinion. We conducted our audit in accordance with international standards on auditing. Our responsibility under those standards are further described in auditor responsibility for the audit of financial statement section of our report. We are independent of the company within the meaning of indicated relevant ethical requirement. This basically in Pakistan, IFAC, International Federation accounting IASB ethical guideline, International Accounting Standard Board guidelines are considered as ethical in Pakistan and have fulfilled our other responsibility under those relevant ethical requirements. We believe that the audit evidence we obtain is sufficient and appropriate to provide basis of our opinion. Basically, auditor independence means that auditor have no stakes, no interest, no investment in the company when he is going to audit. His spouse have no interest in the company. His next of kin has no interest in the company. Interest means shares or any other investment. So the auditor will be considered as independent. In our opinion, financial statement give true and fair view. This is the final thing that the auditor is going to extract from whole audit process. Are present fairly in all material aspect. That is material word will be discussed in ISA 320, which is on the materiality. The financial position of ABC company is of December 31st, 2020. Its financial performance and its cash flow for the year are according to International Financial Reporting Standard and Company Ordinance 1984. Then signature of the auditor, sign. In one paragraph is added in Pakistani audit report that zakat was deducted according to the relevant legislation. So moving further, that was all about the that is basically a fourth part where auditor gave opinion. Expression of auditor opinion. The auditor in his report does not say that financial statements do show true and fair view. He can only say that in his opinion, the financial statements show true and fair view. Why in his opinion? Because he gave reasonable assurance to the user of financial statement. The user of financial statement will know from his knowledge of the auditor whether or not to rely on the auditor's opinion. If it means that if the user of the financial statement know about the audit forms or its quality, its competency, its ranking, then they can rely on the financial statement. If the auditor is known to be independent, honest, and competent, then his opinion will be relied upon. Thank you. This is all about today's lecture. I'll see you in a coming lecture.